Today we are going to see a very profitable strategy, a winning strategy that we have been testing for approximately 3 or 4 months, in a semi-automatic way and with which we have achieved a win rate of between 75 and 80%. As you can see there, I make you variable because you already know that in the cryptocurrency market, because we have much higher volatility, we can sometimes combine our basic knowledge of trading with our own strategies and thus achieve much better results. At the end, the account's growth was between 65 and 75%, and I once again marked the variable for exactly the same thing that I just told you. The most important thing is that it is a very simple strategy to see and use both for all those of you who are new to the world of trading, and if you have been practicing for a few months or years. And it is also a strategy that by adapting it a little, we could also use in other assets. In particular, I'm going to show you how I did it on the pair of Bitcoin with USDT, but I also add that we were testing it with Ethereum USDT, which in the end has patterns very similar to Bitcoin, only with a little more volatility. So I encourage you to test it on Ethereum as well. We're going there. The first thing we need to set up our strategy would be 2 multi-time frame EMAs and a basic indicator that would be the MACD. We clear the screen a little and go to indicators, where by simply typing MTF EMA, we will get this one from here up here on Ripster 47, for example, and with the MACD exactly the same thing. We put MACD and this one comes out of here, convergence/divergence of the moving average. In the case of the MACD, we would have to leave it exactly as it comes to us, but with the EMAS we would have to place, for example, the one we have in red. In data entries we would put length 50 and in resolution 1 hour, since it is the time frame that interests us for this average. On the contrary, the one we have in white would also be 50 in length, but this time in the 15-minute time frame. And what are the rules of this strategy? Very simple. We'll only have to look for longs when the price is above the EMAs, now we'll see, and look for shorts only when the price is lower. Then we would have to look for divergences in the MACD, as I will explain below, and in trades we will place our stop loss below the last structural low, with a 2-to-1 take profit over the stop loss. Basically, the potential gain is twice as much as the potential loss. For example, if our stop loss coincides with 1%, we'll set the take profit at 2%. As you can see in the title, this strategy is used in 5 minutes, and the first rule is that when the price is, as in this case, above both averages, we also come from this upward crossing of the average of 50 in 15 minutes, crossing above that of 1 hour. It already makes it clear to us that we have to look for longs this time. Here we have a very clear example. When we see this happening, we look down at the MACD, and in this case, when we are looking for longs, where should we look for those divergences? Also at the bottom of the MACD. It's always much safer to look for those divergences when we have 2 finalized indicator structures. For example, if we had something like that, but in this case in the world of cryptocurrencies, since it is more volatile, we can take advantage of these shorter divergences, as you can see, to also make a quick profit. Because in the end it is a 5-minute scalping strategy whose operations should not take long to reach our goal. And when should we take the trade? Here, as you can see perfectly well, the price is going downwards while the MACD marks that mini divergence upwards. And when would be the perfect time to enter? Well, when we have this second MACD crossing, which in this case would occur on this candle. So, when we have that close both of the MACD and of the candle itself, we would enter the beginning of the next one and place our take profit with a ratio of 2-to-1. That is, twice the possible gain than the possible loss. As you can see, in just a few minutes we reached our goal and won that operation. As you can see, I am recording these examples directly with the live price. In other words, we don't have to go far back to find more trades. We have one already prepared here that we will see below, but I would also like to give you a couple of tips that you should keep in mind, especially since you see that strategies are obviously not perfect and they also fail. Because we see that the price is above that 1-hour EMA, the price is falling and it marks an upward divergence several times. And in the end, of course, if we entered only by marking these two, that is, in this divergence, the price would continue to fall, which is what I explained to you a moment ago, that it is always riskier not to wait for the complete structure in the MACD to be completed. Because in this case, if we entered just this candle, instead of going ahead through this area, and even if we had entered this zone, we would also have failed. Why? Because if we expand the chart a little, we can see that the price is already contracting in this area, and as you can see, we would have a phase of lateralization where the averages, being so close together, would not allow us to trade. That's why, despite the fact that the long-term strategy has a very high win rate and profit, we can always improve those percentages taking into account what we already know about the stock, price, and basic trading. A little further to the left we have a winning trade again, where we can see that big divergence in the MACD with the price above that 1 hour average. And as you can see, marking a perfect entry right at this point, where we would also place our stop loss below the last low and a take profit with a ratio of 1:2. And as you can see, in a few minutes we would have another positive operation. If we continue a little to the left, as you can see in this area, we should look for shorts because the price is below average. We don't have an entry opportunity. But if we go a little further back again, it marks that divergence in the MACD and shows us the entry just at this point. We placed our stop loss, in this case below this minimum here, because you already know that in the end cryptocurrencies are so volatile, and seeing just this type of structure, we don't mind giving the price a little more relief. Just in case we're going to get this point instead of this one here. So we went down a little bit further and set our coefficient 2:1, which would be approximately around here. There we have it, touching that take profit about an hour after entering. We continue to the left and have an example in short. In addition, right here, I think it is quite clear how this strategy works. We have that divergence in the MACD. In this case, when looking for the short, the divergence in the indicator is at the top. The price is below the two averages. And just when that second break occurs in the MACD, we put the entry with the stop loss at the previous low. Even with this zone here, we could place it a little higher and search again for that coefficient 1:2. In this case, we're going to place it over here. We stretched a bit, and here we would already touch our take profit. Also add that if you already have a little more experience in the world of trading, you can simply control the trade yourself, or adjust some type of trailing stop so that your profits continue to flow. Because as you can see, the operation goes on and on until it practically achieves a coefficient of 1:10. Insane. As you can see, in the end we have many examples. It is a strategy with which we can make approximately 1 to 3 for daily trades, also depending on the market. This, I repeat, is super important in the world of cryptocurrencies because, having that extra volatility, we need to personally adapt each strategy to each moment to obtain maximum effectiveness. For example, what we see here is that we have the price going up while the MACD indicates that bearish divergence. However, if we enter just when the first divergence marks us, that is, in this area here, and we placed our stop loss a little above the previous low, we would see that those market makers would close the trade for us looking for that liquidity higher, and then we would have won the trade. But in that case we would be out. And that is why I tell you that we must always try to adapt our strategies to the variables specific to the market in which we operate. In this case, we know that Bitcoin has an extra amount of volatility, so it wouldn't hurt to look at the last structural maximum, which would be this one here, and place our stop loss a little bit above, to make sure that those market makers don't close the deal for us. And as you can see, the operation now, yes, would be perfect with us taking that profit. As you can see, it is a very simple strategy to apply, which is also very effective in the medium and long term. And that increases its profitability even more if we apply basic trading knowledge, and we also take into account those specific characteristics of the asset in which we operate. In this case, the volatility of Bitcoin. I hope you like this strategy. Leave me the comments you think, if you have tried it, and I would also appreciate a like on the video, and if you subscribe for more content. Until next time.